This is the BioCentury Show.
Brought to you by the 5th East-West Biopharma Summit in South Korea. In March, explore how to globalize Asia innovation and connect with key players across Asia's innovation arc, from India to China to Japan.
Hello and welcome to the BioCentury Show. What a pleasure and an honor for me to bring you the capstone episode of the year with our guest, Stelios Papadopoulos, here donning a tie and a jacket, really raising the stakes of the BioCentury Show, or the tone of it. Stelios, of course, is one of the known by one name giants of our industry. You say Stelios, everyone knows who you mean, and I say that with apologies to the probably many other Stelioses in biotech, but this is Stelios. Currently, Stelios is a chair of Exelixis, which he founded, but is also known for his role on the board and later as chair of Biogen, and has had numerous other roles on boards and as chair. And if that's not enough, he's also co-founder and chair of Fondation Santé, a non-profit for advancing biomedical research. More broadly, however, Stelios is really known for his role in shaping the industry. I'm going to steal from the website of Ovid, where you're also on the board, bridging scientific discovery with financial strategy, because I think that's really captures it. This is a relatively long intro, but only because this is also relevant to what we're going to talk about. Before joining biotechs in an active role, of course, Stelios was an investment banker at Cowen, Payne Webber and more, and started out with an MS in physics, a PhD in biophysics, and an MBA in finance, all from NYU. And as I pointed out, I'm going to pick up on some of those threads in your background as we go through the conversation. But I'm going to start with this, Stelios. You give a lot of talks and are extremely good at bringing the long view together with the issues of the moment, in my mind. And so I want to start there. We're in what seems like an extraordinary moment in biotech. High innovation, a long bear market. Maybe that's opening up now. Greater regulatory uncertainty than we've seen for decades, but also greater competition from overseas, in particular China, of course, than ever. So I want to ask you how you're looking at this moment in the context of what you've seen and what you're advising CEOs and innovators, because I know you have a big mentoring role as well. So how are you looking at this and what are you advising people?
Well, Simone, first of all, thank you for having me. It's truly an honor. And I did dress up for you. I'm also on a one-man campaign to bring back formality and elegance to professional interactions, but I'm failing. Whenever I'm in the city, I may be the only guy wearing a tie other than limo drivers and security guards. So,
you're going to bring back hats as well? You know, JFK got
no,
rid of
not
hats.
quite.
Not the hats, okay, yeah.
In any event, look, I think my main observation to what you said is, it seems to me that people in the industry, and perhaps this is not unique to us, but in other sectors as well, they look at everything in a very acute way. They just look at the environment they're in, with a narrow circle around the point where they stand, and develop fears, anxieties, excitement, what have you. If you really look at it from a more distant, more measured point of view, I would certainly not call this a bear market. If anything, just 10 days ago, in the space of 24 hours, companies raised $3+ billion in follow-on financings, unprecedented. The stocks have done reasonably well this year, coming from a low point, mind you. But I think in part, the reason why we seem to overreact, I think there are really two issues here. One is the bulk of the industry, in terms of management and the investment community as well, has joined the space in the last 25 years. And there's another 20+ years prior to that, which have been ignored, and perhaps there are lessons from there to be learned. For sure, one of them is just to be measured and not get overexcited. I think the other point that has people agitated in a way is the way the trading in stocks in our space has evolved. On good news, stocks go up 2x, 3x, 5x. On bad news, down 80%. This volatility, which is probably driven by the need to form positions or unwind positions aggressively on the part of the hedge funds, that is adding to some of that anxiety out there. But by and large, what I see, again, from a more objective, more distant point of view, extraordinary science, the likes of which we've never seen, and it is getting better. That's really the progress of it. There are two major forces out there that we need to take a good look at and understand, and they're slow moving. So one of them for sure is price pressure. There's price pressure on drugs. There's no doubt about that. People adjust nicely to gradual change. If I go back 10 years, it was routine. We used to have an expression, we'll take price. Beginning of the year, we'll boost prices across the board 5-10%. Mid-year, a similar amount. Easy, no problem. Growth was there. That's no longer the case. We cannot take price anymore the way we used to. So the industry needs to really understand this and also assume that it's only going to get worse in terms of the pressure on prices. The second point is the emergence of China, as you pointed out. That is remarkable. It is extraordinary what's going on there. And let me also add South Korea and somewhat Europe. As of late, you see more and more innovation creeping out of those places. Everybody who wishes to dismiss China will say, well, they're just copycats. Well, maybe in some instances they are. Maybe they're not. At the rate they're going, no matter where they are now, 10 years from now, my prediction is they'll be the true innovators. And we need to take this into consideration.
So I want to come back to this China question. In fact, you already tapped into several of my questions, which is great, because I want to spend a couple of minutes on that afterwards. But, when we talked, you pointed out previously, you pointed out that, 20 years ago, this would be a great financing environment, what we're going through now, right? And one of the things you also mentioned is that you often begin your talks with a question that sort of digs into the history or the early giants and founders of the industry. And I sort of want to know how much you think today's C-suite knows about the early days, and more importantly, why is it important for them to know?
Yeah. Well, the answer to the first part of your question is very little. The current management teams and the financial community to some extent, other than the very old investment bankers who are still around, they know very little about the people who truly built this industry back in the 80s, 70s and 80s. I typically, as you suggested, I often begin my talks in the industry by asking a question. I said, look, please raise your hand if the name Bob Swanson rings a bell, or George Rathman, or Hubert Schumacher, or Henry Termeer. Once in a while, some hands are raised when I mention Henry's name. Hardly anybody knows who Bob Swanson is, who perhaps was by far the most important person in helping us understand what to do, how to behave in biotech, how to build enterprises. Bob, again, for those who can listen to this podcast, who may not know and don't have the courage and interest to go look it up, Bob Swanson was the founder of Genentech and first CEO. George Rathman, founder and CEO of Amgen, Hubert Schumacher of Centocor, and Henry Termeer was CEO of Genzyme. Now, why is it important to know them? Well, for one thing, it puzzles me because we are an industry of science. Many of us were academic scientists before we're doing what we do now. And in science, anytime I would start a project in the lab, the first thing I would do is go to the library and read every paper written about that subject or related subjects that I could find. And once I knew what had been done, then I could proceed. So I would have imagined that those who came in the last few years and are running enterprises may just be curious enough to find out how this all came to be, this whole enterprise of biotech. The second point is not necessarily in every instance, but in some instances, there are lessons to be learned about what transpired in prior markets, prior windows, prior instances, regulatory hangups, other complications, alliances, and extract some lessons from there. And I just find it puzzling and somewhat disappointing that there isn't as much interest in the history of the industry.
Yeah, I mean, I also want to point out that in the early days, you couldn't just say, we'll take it on price. I mean, the pricing approach is really something of the latter, let's say, decade or two. And I think it was a very different place back then. But I want to build on this because your point is well taken that people don't know the founders, in many cases, of those great companies. But I hear every other week, and probably you do as well, I want to build the next Biogen. I want to build the next Genentech. And what I really want to know is whether that could be just healthy ambition. But do you think that you need to have that strategy from day one? If you want to build the next Biogen or Genentech, if you're serious, is that something you need to think about from day one? Because I think that when those people built it, they probably didn't know what Biogen and Genentech would become. So how do you think that people today should capture that ambition?
Well, I certainly agree with your observation that those who build the great companies did not fathom at the time they were starting the companies what would become of them. And in fact, part of the challenge, anytime somebody says, oh, I'm going to build the next Amgen or Gilead or whatever, I can assure you they have no idea how these companies came to be what they are. And they came to be by a combination of great execution on the scientific and business front, great leadership, some stochastic aspects of environmental inputs, and perseverance. But there are little details in every instance that point to how a decision was made, how you redirected a company, how you reset a company, and all these things are missing. Now, is all that critical? Do you need to have all this in place when you start a company with the ambition to build, let's call it a great company? And I would say not necessarily in terms of the details. My view always to young entrepreneurs, anytime they say to me, I want to build the next Vertex, the next Genentech, my answer is, don't think about this. Focus on executing what you do. Think of this. If you were to climb Mount Everest, would I want you to give me a full plan how you're going to go? And you're the first one who's going to climb it, or one of the very few early ones. Would I want you to give me a very detailed plan how you're going to get from base to the very top? Not necessarily. What I'd like you to do is give me a good plan how you're going to go to the first base camp. And once you're there, make an assessment and give me another plan about the next camp. But along the way, and here's the wisdom and the challenge, as you develop those plans, make sure you don't do anything along the way that might compromise your ability to go higher. For instance, many companies go do corporate alliances. Validation, capital, inputs in terms of development, all that is a good thing. Well, some of those alliances become overwhelming in terms of the pressure they put on the company because they take away any possibility for upside. It's pretty clear it's very hard to build a great commercial success without licensed products. You have to have something that you're going to market yourself. So that's the sort of decision, if you make it early on, if you do a comprehensive alliance about everything you have, then the probability you will build a freestanding, meaningful, with large value company, it's pretty low.
So let me ask you this. I'm going to try and make this a concise question. It's a little bit rambling. I mean, one of the things is that as those people built that company, and even today, the industry changes. Like you're at the beginning of Mount Everest, but by the time you even get to first base camp, let alone, the peak, the industry is changing around you. And what we've seen probably in the last 2 decades in particular is a very different role of pharmas versus biotechs, right? I think we now mostly agree that a lot of the innovation is coming from outside of pharma. We call it external innovation, whether it's from biotechs or academia. And pharmas have become, very important in getting drugs over the finish line and commercializing them. So I wanted to ask you if this is still in flux. How do you see this relationship, this symbiosis evolving, if at all, and what the industry is going to look like in maybe 10 or 20 or 30 years?
Yeah. Well, a number of a number of points about the issues you raised. For one thing, I think it's a little bit of a misinterpretation of history again, that it's only recent that pharma is relying on biotech for discovery. If you go back to the 80s, you will find that 20 to 30% of the drugs in any big pharma company across the board, with little distinction, were coming from outside. Now, what were the outside sources? It wasn't biotech, because it didn't exist then. It was Japan and Europe. Lots of compounds, the smaller Japanese companies, the smaller European companies would discover an interesting compound. Some US company would in-license it for US or globally and go from there. Now, the proportion has changed. There's a lot more outside science coming into pharma, for sure. I would probably say some pharmas, 80, 90% of what they sell has come from the outside in one form or another. And a big part of that is obviously biotech. So that's one thing. Where is all going to go from here? I suspect the notion of the huge size pharma company is a very complicated, challenging task. And the reason for that is because Wall Street is infatuated with growth. So nowadays you need to be a good stock, a stock people want to own and talk about and be prideful owners of it. You need top line growth and bottom line growth. And that's just simply in an area where growth is driven by the occasional discoveries or clever M&A deal. It's very, very hard to programmatically have it in place for 20, 30 years. So pharma companies go through these ups and downs, and many times on the way down, they get dismembered or acquired. Now, furthermore, I would say I am not convinced there is real economy of scale in having a very large pharmaceutical company. Sort of like a 30, 40, 50, $60 billion business. Maybe there is, but I'm not convinced. I think the only competitive advantage any of us have in the business is domain expertise. It's knowledge of a particular area of science, inside and out, the therapeutic categories associated with it, and then our market presence and field and interaction with those purchasing and prescribing our drugs that help us shape better our priorities. Whether you can learn important lessons from cardiology to apply to cancer, I doubt it. Once in a while, people will bring up this as an example. Oh, we have this drug, we had it in PAH, and then it looked like it was going to be very good for, kidney cancer, and that's great. And we'd lose this if we don't have all of that. I'm not so sure that's a compelling argument.
Well,
so I
also,
suspect, please.
Yeah, I was just going to say, so you've got that against the inefficiencies of these very big organizations, but you can have that orthogonal benefit without it all being under one roof.
Exactly. I've been preaching that, but unsuccessfully.
Sorry, I interrupted you there.
But the point is, if people agree, as I do, that size is a handicap rather than an advantage, you may see some companies break up into smaller pieces. And if that is to happen, it certainly will not happen with the initiative of the boards and managements of the big pharma companies. Look, all of us compete and like to win and grow. And it's very hard for a pharma CEO and members of the board to reach all the way to the pinnacle of the business, beyond the largest companies in the business, say, and you know what? For better return on invested capital, we should now break up the company into smaller pieces and distribute those to shareholders. So that typically happens with external pressure, whether it's regulatory, antitrust, or private equity. And I suspect in the next 10, 20 years, private equity, as funds are getting bigger and wiser and a lot more informed about specific industries, they may step in and recognize that you'll get better return on invested capital with focused smaller enterprises than the large ones.
Well, that is
just a supposition.
Well, that is an extremely interesting one. We're going to have to take a brief break, but when we come back, we're going to talk more about the continually evolving world of biotech.
The BioCentury Show is brought to you by the 5th East-West Biopharma Summit in South Korea. An arc of innovation is emerging across Asia, and Western biopharma leaders are taking note, from cross-border deals to new co's. In March 2026, the 5th BioCentury Bay Helix East-West Biopharma Summit visits South Korea for the first time. Meet the biopharma leaders putting Korea innovation on the global map. Learn why Korea has become a clinical trial and manufacturing hub. Discover if Korea is the next hotspot for new co-formation. Plus meet biopharma innovators from India to Singapore to China and Japan. Register now at biocenturyeastwest.com.
We are back at the BioCentury Show. I'm Simone Fishburn, and I'm here with Stelios Papadopoulos, sometimes referred to as the godfather of biotech. Now, I say that, Stelios, because if you are the godfather, I am not sure who is the godmother. Now, I do want to talk about the role of women in biotech leadership. Perhaps you can tell me who's the godmother. There were hardly any women in the early days of biotech, and I know this. I mean, some people have told me that the key movers and shakers in the investment world were women, but you've been kind enough to show me some of the data that you have, which is an incredible tome of work on public biotech IPOs and more. And there's very few women in leadership in the early days. I think that we can agree that many of the barriers have been breached. There are more women in leadership positions. But, you know, when I look at the numbers, every time I do, it's still very much a man's world from my perspective. And so I wanted to know what your observations and thoughts are about women in the industry and their role in leadership.
Well, I mean, absolutely, no one could argue, no sane person could argue that, women are handicapped versus men, or whites versus blacks, or the other way around, or Jews versus Christians. Look, we're all professionals. By the time we get to the top of our business, we're all pretty much the same, equally capable, equally determined, equally committed. So that's not the issue. Now, there's no doubt, on the other hand, in our society and around the world, historically, there's been some form or other of discrimination for different reasons in different places. Particularly to the point you're referring to, back in the 80s, biotech, much like other industries, was really a man's world. And as some people may know, I'm something of a data geek and a little bit of a nerd. In my spare time, I like to read prospectuses because I think they're fascinating. So
one day I'll get you to tell me that prospectus story on camera, but I don't think we've got time for that today.
But in any event, I've cataloged all IPOs in biotech since the beginning of time. And roughly, just for reference, since 1979, where the first legitimate IPO was recorded by me as the beginning of the industry in the public markets, there have been, through the end of 2024, 1,240 IPOs, and a handful more this year so far. Back in the 80s, from 79 through 1989, through 1990, to be precise, there were 125 IPOs. So I always ask that question of audiences if they bring up the issue of women on boards. These 125 companies had roughly 750 board positions available, 4, 5, 6, board members per company. So the question is, of these 750 board positions, how many were women? The answer is a meager 15. What is even more fascinating, and I'd say somewhat embarrassing, of the 15, 7 were the spouse of the CEO. And only one, a little obscure company in the 80s, had a female CEO. It was called Tago Diagnostics, TAGO. And in fact, the female CEO was also a founder, was sort of like ousted in a midnight coup by the all male board, a year or two into her tenure. So yes, it was quite different. Again, it's not as if biotech was the only guilty party. It was all of industry, all of society. It's changed significantly. On the other hand, it is somewhat puzzling. There are companies doing IPOs today with all male boards.
And the market isn't requiring, of course, any.
Well,
We're not allowed to talk about
many
diversity
of the
anymore.
requirements that were introduced some years ago in the last 12 months have been dismissed or minimized to a great deal of extent, whether it's NASD, State of California, the index funds and governance guidelines on them, the shareholder advisory partners, all of these are changing their positions a little bit, obviously with a strong encouragement from the federal government.
So, that question, this next and the next couple before we close, really are about our ability to absorb and benefit from these variety of different viewpoints and talent. And so I do want to turn to the topic of China, which I think, for me, this is the year that biotech woke up and realized the amount of talent, or if not competition, from China. I should stipulate BioCentury has been following this for over a decade, right, at this ecosystem. But I feel that maybe China is one of the great disruptors of the industry. And I wanted you to expand a little bit on what you talked about before in terms of what impact you think that corner of talent will have on the global ecosystem.
Yeah. Well, look, first of all, China made a very concerted effort as a national priority to repatriate many of their leading scientists who are practicing in Europe and the US. They created a number of incentives. They created an environment regulatorily that would permit them. You're well funded as a repatriated scientist. You give a chance to participate in commercial endeavors. All of that is bringing back a great number of people. There's the additional advantage that the regulatory environment in China and the work ethic, which reminds me of the work ethic in biotech in the 80s, but not today. They allow them to do rapid clinical studies, pretty well executed. On occasion, you'll find the regulatory authorities in the US and Europe rejecting just Chinese data in a clinical trial, but that in itself will change, I'm pretty sure. So I think they're moving aggressively forward. Right now, whoever wants to have, PD-1, VEGF, bispecific goes to China, puts a few $100 million down and gets one, and they all kind of like look about the same preliminarily. I'm sure they're not going to be the same once we fully investigate them. But there's so much talent, capital is available, and so much determination, such intense determination to succeed, that it's inevitable they will innovate. What allowed us to innovate in biotech in the 80s and subsequently is the great thirst for knowledge, the desire to understand the unknown and work really hard. Now, a little bit of biotech has become, systematized and
complacent.
Yeah, exactly. And I'm not, when you go to a company at 4 o'clock in the afternoon to go up to visit somebody, and more people are riding the elevators down than in, something is wrong.
So, you mentioned earlier South Korea, where we've got an upcoming conference there, East-West, and Europe. And I wonder if you think that there are similar drivers, or what the drivers are there that were behind your statement.
Well, I think South Korea, and I'm by no means expert in Asia. South Korea strikes me a bit more like China. Is the same mindset of let's make this a priority. In these countries, you could have national policy and priorities that get set and then people execute. I think Europe is more awakening. They're seeing that perhaps they need to create something of their own. There are way too many talented scientists in Europe. They understand finance. They've started companies in the past. You just look at the latest multi-billion-dollar transaction by Pfizer, Metsera. The assets of Metsera came from Europe and South Korea. So there is something going on there, and I think that's a good thing.
And from London, which at least at some point in the trajectory, was part of Europe. But yes, I take your point.
Well, it is
There's
geographically
sore
Europe.
spot there,
It's
sore
not the
spot there.
European market.
Yeah, yes, it's absolutely
but it's
the point.
Europe.
So I've got one last question for you now. One thing that concerns me, but maybe you'll say I'm wrong. One thing that concerns me is that we are too insular as an industry. Now, let me go back to your training. You had an MSc in physics and a PhD in biophysics, in addition to your MBA. And I actually think many bankers today, many people in the venture world, they also have science backgrounds. But it seems that we are a very complex industry that most people don't understand, and that I think it's difficult without that background to penetrate. And I wonder if that's healthy. I wonder if, first of all, if that makes it harder for us, not only for the public and politicians to recognize the value, but I wonder if we're able to benefit from different industries. We just talked about women, we talked about China, and I just wonder whether, as an industry, we are too insular, leaning back on the things that have worked and the people we know, and whether we make it too hard to accept different ways of doing things that could actually be to our benefit. Maybe you can cast a different light on this and tell me how you think about it.
No. I think you're completely on the spot. I think you're right. And I think it's the point you made originally. The complexity of our sector makes us, over-index in trying to understand the specifics, the science, the clinical development, the finance, the operations. It's a highly esoteric industry. Every aspect of our business is unlike pretty much any other sector in industry. For example, I always find it amusing that everything we write, we report, we talk about in terms of what's likely to happen in the future is, we'll make great discoveries. Pharma needs drugs. Pharma will buy us, so all will go well. Somewhere along the way, we're missing out on a few things. One is we're really only now beginning to look at China and South Korea and the other geographies as potential threats or sources of innovation. One thing that most biotech CEOs don't pay any attention to is the extent of the national debt, the deficit, interest rates, what's going on at the Fed, how markets move, the shift of fixed income to equities and vice versa, all of which drive markets in a far more pronounced way than whether Pfizer buys somebody or Merck buys somebody else and at what price. And it's part of that insularity we have. The other point you mentioned, which is equally important, and I've been truly intrigued by this, I'm always looking at lessons I can learn from other sectors of how they do something to see if we can apply it to what we do. And I don't think we do enough of that, anywhere near enough. And again, the problem might be we need to expend so much energy in dealing with the complexity and esoteric nature of our sector that we just don't look around.
I wrote that down earlier because you talked about other sectors and having a sort of very narrow focus. And it would be interesting to see if maybe the advent of AI is probably the biggest chance for this to happen. But whether we can grow our interactions with other sectors and at least our learnings from them, I don't know if that's going to happen and what the time frame would be.
Well, just if I could have another second or two, here's an example of historical insight. Right now, we're all dealing with this AI thing. We all talk about it, and many of us are doing something about it. And I think the initial reaction is in dealing with the AI sector, call it that. We find that those with data science background don't really appreciate the intricacy, complexity, and multidimensionality of what we do. And we on our end don't understand scale, speed, and computational efficiencies that these people bring to the party, and also the fearlessness of dealing with huge projects. Who would have believed that Google one would get up and say, we're going to ride cars through every street and photograph it, and we'll make Google Maps. I mean, nobody in biotech would think that way. Now, Is this insurmountable? Here's an example. Back in the early 90s, when biotech went beyond the initial stage of recombinant DNA, the question on the table was this issue of biology versus chemistry. The chemist thought biology was storytelling. The biologists thought chemistry was tinkering, and they couldn't come together. So companies were either chemical or biological. By the late 90s, there were enough companies that created this combined culture of chemistry biology where there was equal comfort with both disciplines, and then moved from there effectively, as they should be. So I suspect we'll find this balance with AI as well. I mean, right now, you see a bunch of initiatives in operations, in writing reports, things that improve productivity. On the discovery side, there's a large number of companies sort of like designing molecules around a scaffold faster than you would do it through synthetic chemistry in the lab. And that's also good and is improving productivity. I'm not excited by any of those things. These are small incremental improvements. What I want is to see data science identify new biology. I want somebody using data science to tell me there's a target for Alzheimer's. Here's a pathway to think about. And now go on and let's jointly design molecules, create assays, and go on and interrogate, this system. It's going to happen. And I think that will be the big breakthrough. It will also happen, what will change dramatically is how we promote drugs, how we communicate to the medical community the profile of a drug, how to use it, what to do with it. That will change dramatically as well. This old concept of a sales rep walking into an office, waiting in the reception area for an hour to catch a physician on the way to the bathroom for 2 seconds, tell a quick story and get him to sign the Viva platform with his iPad. That just is not efficient.
Stelios, that is a great place to end with that vision. I want to thank you very, very much for your time. Fascinating conversation, and wishing you the best for 2026 and hopefully many more good conversations. Thank you.
I will look forward to it, and all the best to you and your colleagues. Thank you.
Brought to you by the 5th East-West Biopharma Summit in South Korea. In March, explore how to globalize Asia innovation and connect with key players across Asia's innovation arc, from India to China to Japan.
Kendall Square Orchestra provides the music for the BioCentury Show. The group connects science and technology professionals and other members of the greater Boston community to collaborate, innovate, and inspire through music while supporting causes related to healthcare and education.